go. Let's analyze. Let's do a vote in the chat really quick. What pair would you want me to cover this on? GJ, gold, or a random pair? But GJ or gold, let's vote on that. I want to cover something that a lot of people trade. Gold, GJ. All right.
GJ.
Yeah, GJ. Okay, cool. So we have GJ pulled up. Let me clear this chart. Remove drawings. Okay, so first things first, when taking any trade, you always want to know what the trend is, what the overall trend is in the market. Now, I'm sorry. I always go to the monthly time frame to confirm what the overall bias is, but keep in mind when you're on the monthly time frame, it's going to take things a lot longer to play out. So, for example, if the overall trend is bearish, but on the monthly time frame you see a bearish engulfing, it doesn't mean that price is just automatically going to run away. You know, you're going to have retracements and stuff like that on the lower time frame, but overall you want to find out what the trend is. So you can go to the monthly, get an idea. Market is creating lower highs. But then we also did create a higher low here, right in here. So as you work your way down time frames, your bias may begin to change because you have to keep in mind it's going to be a domino effect. Wait, I think we have people in the waiting room.
I'm taking care of it. I'll watch the waiting room.
Okay, cool. So it's going to be a domino effect. So you're going to start seeing the trend change on the lower time frames and then work its way up to the higher time frames. So right now, looking at the weekly, we can see that higher lows are forming. Let me grab, let me see. Where is it? Drawings panel. Guess we'll use this. Yeah, that's fine. So higher lows are forming in the market. And we also have higher highs forming within this structure here. This was the last lower high that we had. And we can see price broke above, came back, created a higher low, pushed up, created a higher high, and then another higher low. So now when you drop into the daily time frame, let me delete this. Let me see. Type 1 in the chat if this is making sense so far. Just want to make sure you guys are following. Cool. All right, so we know the monthly time frame closed bearish last month for September. So after each monthly, weekly, daily closure, you can expect some type of pullback. It's not always going to be, you know, a super crazy pullback or whatever, but you can always expect some type of retracement to retest the previous candle. So the lower time frames, lower than the monthly, of course, is starting to show us that we're getting that pullback. Morning star on the weekly. Now, if we go into the daily time frame, this is where, well, wait 1 second. Horizontal line. Okay, so let's analyze our weekly levels really quick, because without these, you're not going to be able to spot the reversal. One more. Somewhere there. Okay, so we have our weekly levels. Drop into the daily. And now I want to see what the trend is on the daily time frame. So we can see the daily was uptrending, creating higher lows, higher highs, higher lows, higher high. But then we had a massive pullback. I'm pretty sure this was news. September. I can't remember what was going on, but I'm pretty sure this was news based on how drastic the pullback was. So now we can say, okay, price broke up trend structure on the daily, but we have support in here. We have support there, but then we have resistance right here. Okay, so right now GJ is within a range. Where is there it goes. See how many pips this range is. About a 70 pip range right now. Reason why I selected this area based on this previous high, we can see 1, 2, 3, 4 rejections. Price came back again, 1, 2, and pretty much a third rejection yet again. So it's letting me know that this level is fairly strong, but then you also want to pay attention to the fine details. Because this bullish candle did close above these previous closures here, these previous closures here. So it's leading me to believe that the buying pressure is starting to come in after looking at the weekly time frame and how bullish last week closed, this morning star formation. I'm expecting to see some type of pullback because the candles did close, but we're going to drop into the 4-hour time frame and see what that is looking like. So when we're on the 4-hour, we can see that we do have this level of support in here. Bullish engulfing on the 4-hour time frame with seller's exhaustion to the downside. And I'm going to get into the reversal thing. I'm just breaking down time frame by time frame. Type 1 in the chat if this is making sense so far. Cool. I just want to make sure you're following the storyline because every time frame is going to tell you a story. So we are being supported within this zone here. And now the most two recent candles are showing exhaustion to the downside. So now at that point, this is where the reversal thing comes in. It's more of a lower time frame thing. When it comes to doing it on the higher time frames, you're going to be waiting a little bit longer. So I'm going to show it to you based on an intraday perspective if you were looking to catch a reversal or whatever the case may be. So we know that this candle closed bullish here. We're at a level of resistance based on the daily time frame. Go back into the 1 hour. We can see that price is consolidating within this area here, throwing wicks to the upside. So what you could do, you could highlight this region and say if price breaks below this box region, then you know most likely it's coming back into this region here. Let's go into the 30-minute bearish engulfing. Why does it keep doing that? Fine details. So you want to zoom in. We can see that this candle closed below the bodies of that candle. So for me, that in itself would somewhat be enough based on, what I'm seeing on the higher time frame to indicate to me that price is going to come lower. Now, from an intraday perspective, you have to keep in mind price is looking bullish on the higher time frame. So you want to see where these lower time frames are finding support. Drag this across here. Short position. So you could either wait for the retest of this candle, so slight pullback, short from this region, stops above the box region, about 18 pips, and then this being your target. But we also have another level here. So this is where catching reversals can be tricky, because you're trying to anticipate how far it's going to retrace, opposed to just going with the trend. You're trying to anticipate the retracement in a sense. So for me, I would say this zone, based on what price did in here, would be your safest bet, but it's still a 2-to-1 ratio, risking 18 pips to get 38. And then from there, you could always look for the turnaround. Or if price continues lower, then you can look to go long and stay with the trend, because price is finding support again on this lower time frame. The overall trend is starting to look like it wants to go up based on the weekly, based on the monthly closure, retest of that candle. Daily closed above the previous closures. So you essentially built your story all the way down into the 30-minute and the 15-minute. And then, of course, these targets would be based on your higher time frame analysis. So for me, I would be looking at most likely this level here, because I see price struggled there. But that's still a 141 pip move. And if you get the perfect rejection, you're risking, 11 to 15 pips on that move. Let me check the chat really quick. Is this training?
Yeah, the training's being recorded. All of the recordings are put on our YouTube channel.
Yep. And type 1, if that made sense so far.
Another thing to point out, a little bit off topic, but you guys have probably noticed that Orion does GJ a lot. And I just want to kind of remind everyone that hasn't already been told this, that you really should try to zone in on 1 or 2 pairs that you're really going to put a lot of your trading focus into. You're hurting yourself by trying to juggle a dozen pairs at once. The thing with GJ and Orion, he's very profitable and he's very good at trading GJ, because at any given time, I can ask Orion, what does GJ look like right now? And he can tell me without even looking at a chart. And you need to have that kind of relationship with the pairs that you're trading so that you know how they react to things. And every pair is going to behave a little bit differently. And if you're trying to juggle, like you're jumping from minor to minor, like you're trading a pair you've never even looked at before just because the technicals look good, you're hurting yourself. And that's why, sometimes you're going to feel like your trading's inconsistent. It's not only because you're not following a trading plan, it's because you're dealing with different pairs at all times. Pick 1 or 2 pairs that fits into your trading schedule, like Orion does, like I do, like Jordan does, and focus on that pair.
I agree. That's one thing. It's like I really agree with that, because I started to veer away from GJ like around these areas. Wait, let me check the daily just to double confirm that. But yeah, it was around these regions that I stopped messing with GJ for a little bit, because there was just a lot going on fundamentally, as you can see, and price was just whipsawing back and forth. And at this point, I was accustomed to swing trading, you know. Even when price was over here in this region, so August and September were like two bad months for me when it came to GJ, and I had to just leave it alone because when it comes to swing trading, I'm used to holding moves, let's say from here to here or from here to here, like level to level. But I was looking for the reversal from this level. And this is why I say trading reversals. Actually, this is a great example of why trading reversals could be like detrimental in a sense, because I'm looking at what price did in the past. And I'm saying to myself, okay, it was supported over here, resistance here, melted, resistance here, melted. Price was, making its way up there. And then once it got there, I started seeing the wicks getting thrown into that region, bearish engulfing. And I'm like, okay, cool. Price is ready to go. I must have entered in here because I was going to take it back down to this level. I like to trade, I'm not sure if I said this already, but from level to level. So I was going to take it from here to here. 4 or 5 times I entered a trade, kept getting stopped out by these wicks. And then it broke up. And then I'm like, okay, cool. Now it's probably ready to go down. Because a lot of times what you'll see in the market is price will take out a previous high and then melt. But at the same time, you're trying to predict when the reversal is going to come. Instead of just going with the trend and saying, okay, cool, well, price is finding support in here, so let me just look for longs. I'm like, no, it has to reverse right now. When in essence, it doesn't have to do anything. During this time in August, there was no liquidity in the market. August is like the vacation month. So there's not much movement in the market. And if you look at most pairs in August, this is what you'll see, kind of consolidation. So I saw it break up, and then I said, okay, cool. It has to be ready now. This huge bearish engulfing happened. Price came down, ripped back the other way again. And then after that, I was just like, I'm done. I'm not messing with it, but that doesn't mean, you should go trade 10 other pairs. But what did I do? I started looking at a bunch of other pairs, and I'm like, okay, well, I like the structure here. So I started trading NJ, never really trading New Zealand pairs. I'm like, okay, had a few winning trades, but then I started experiencing like volatility and wicks being thrown in directions that I just wasn't expecting. And I'm like, all right, this isn't working. So I had to put that down. And then I just realized, I looked at the first 3 quarters of the year and I said, what was I doing then that I'm not doing now? And it was just sticking to my guns. So I went back to gold. I went back to GJ. I picked up pound Aussie only because I had back tested it a little bit over the last like month and a half and I liked it. But outside of that, you really want to understand your pair, because I can do technical analysis on any pair, any commodity, anything you throw at me, but I can't tell you how volatile that pair is going to be. So I can give you the bias on that pair, but I can't tell you if it's going to spike 70 pips in one direction and then, go with the trend, or I don't know if that type of pair you typically need a 40 pip stop loss or a 45 pip stop loss. Whereas with GJ, you can get away, depending on the time frame you enter on, with a 20 to 30 pip stop loss if you're intraday trading. If you're sometimes even a 10 pip stop loss. But if you're swing trading, I know that I need at least a 40 to a 50 pip stop loss, because the 4-hour time frame is going to range a little bit more. So you start to pick up on those things the more you trade a certain pair, or even something like gold. I understand that gold is going to create a lot of wicks on lower time frames. So I'm not going to get my bias on gold from the 1 hour, because I understand that it will do whatever it wants on the 1 hour, but still follow the trend of the 4 hour or the daily. So for me, and just a piece of advice if you do trade gold. Gold. I usually like to look at I glance at the weekly just to get an idea of what the weekly is doing. Like I think gold is going to push a little bit higher this week into the 1930 region, based on the wicks in here. But I'll glance at the weekly to get an idea. But the daily and the 4 hour are like my best friends when it comes to gold. Because once you start seeing price slow down on the daily, if you just look around the chart, that's when you get like an impulsive move. So even down here, start seeing wicks, support being found. Oops. There we go. So the daily time frame for me with gold is like solid. You can see the clear levels of resistance. But when it starts to consolidate, that's when I kind of just leave it alone for a little bit, because like I said, it will wick both ways, take you out, and then move. So I didn't catch this whole up move, but that's just me personally. I don't like messing with it when it consolidates around certain levels. So, yeah. Type ones in the chat if that was helpful. I hope so.
Feel free to give us questions.
Say that again, Josh.
I was saying, feel free to type questions in there if anybody has them.
Definitely. I'm most likely not going to be taking any trades tonight. With NFP being Friday, I kind of want to see what London session does. So as far as signals for gold, I'm expecting to go long from around like 1893. Hold up 1 second. So yeah, I'm looking to go long from gold from around these Asian lows here from Friday, but I'm going to wait for the morning. It's like if I miss it, it's unfortunate, but I just don't want to take the chance taking this trade tonight during Tokyo, and then London just rips it down into this region here, and then I could have just got in here in the morning, because I usually get up right after the London 4-hour candle. So that's kind of my bias right now.
There's a lot of fundamental influence on gold right now too, with the whole Trump having COVID thing. I probably won't be trading it for the next day or two, just until we see how all that how all that works itself out.
I personally don't trade NFP, Troy. Reason being is just because now if I'm in a trade, let's say I get into a trade Thursday morning, and like let's say hypothetically, had I not closed out my position from down here, then I would have still been in this trade for NFP. But when price came into 1897, I decided to just close because I felt like it was going to roll back over based on that structure. But if I would have been in that, I would have held, because I would have been risk-free. I would have taken profits off the table. And then it's like, if it does just melt, it doesn't really matter. But as far as trying to take a trade right before NFP, it's like, it's really not worth it for that, quick 30-minute volume surge, because if it goes against you and slips your stop loss, it can be bad. So strategies, price zones, and news don't mix. I wouldn't say they don't mix. I mean, I feel like news does get driven into certain levels based on sessions and stuff like that. I've started to realize that usually what the Asian session does, the New York and London session tend to follow. But usually you'll see like a news event push price into, like, for example, hold on. When was this? Okay, so this was NFP Friday. So this was the high of NFP on Friday. This was the high of Tokyo on Thursday. And you can see that when New York opened, it drove price right into the previous New York lows and the previous Asian highs. Or even if you look at it from this angle, Asian highs, price pushed up for New York, drove back in to the Asian highs, and then pushed up to create a new high. Asian session opened up, creating a new high, so on and so forth. So now you can see I'm looking for entries around these Asian lows because I feel like when either Tokyo or London opens, we can drive price back into those regions and then continue higher to create new highs around 1930.
Cool.
I have to use the bathroom, so I'm going to give it to you real quick. I'll be right back.
Sounds good. All right, guys. Chart requests, hit the chat. Crypto, Forex, stocks. How the heck do I share my screen again? There we go. Let's do some charting, ladies and gentlemen. All right, hold on. I got to find all my stuff. And we got people dropping from the meeting right when we're about to get into the good stuff. All right. Right. UJ, UC. Let's do it. AU. All right. Let's take this one thing at a time here. Okay. So I have some stuff on here at the moment. I'm probably just going to clear this. Although this is kind of playing out already. So last week or the week before or whatever, I don't think I did UJ last week, so it would have been the week before, but we were calling for this to spike down to the bottom here. We can kind of readjust this now and tighten up the potential channel that we've got. But we did come down and wick the 38.2 on the daily, so that's cool. We're coming back up into this area of support and resistance, this consolidation here. I still think this will probably go up a little bit more, so let me clear this and we'll just redo it. So we're kind of curving around on this trend line, this ascending trend line that we had. We are currently sitting at the 50 of this larger pool. I think the chances of this moving back up to wick into the 61.8 range is still in the cards. I think that bias that I had before is still where I would be shorting UJ. And if we go down to a lower time frame, this is just messy. This is why I don't like UJ when it does this nonsense and just moves sideways. We broke out of the consolidation a little bit, and we're currently retesting that level. So it'll be interesting to see what it does from here. We're pulling back on it. If we measure here, retesting that break of consolidation would be a 61.8. So I think from here, we're either going to see it come back up and go here and then drop to make a new low, or we're going to see it continue up probably into this area. And then this is where I would be shorting it. I don't personally think I'll be taking short positions from here just because it doesn't fit into my trading plan for me to be taking a position that is has this kind of risk reward. UJ is really one that I don't enjoy trading for this reason because it does this nonsense. But we did have a really clean break out of this consolidation, and then I think it is working on this retest of that break. And so it'll be interesting to see if this ends up respecting the resistance around that break here and then dropping. And from there, what we're really looking for is a lower low, right? So based on structure on this time frame, we're waiting for this to come down and make a lower low and then make a lower high. And from there, we could get into a short position. I wouldn't be shorting on here because we have no confirmation of a lower low yet. So I'm not super confident in that bearish market structure based on this information. And because I had already been expecting a pullback into this higher level around the 61.8 of the bigger daily move, that is where I would be shorting. So right now I would be out of UJ for that reason. GJ, yeah, we did it last week. I might still have, oh, actually, yeah, I think I still have GJ from last week. I'll pull that up real quick so people can see, or from last Monday, I think it was. So yeah, this yellow line right here is where we entered on GJ last week, I believe. 24th, that sounds about right. Let me check the calendar. Maybe it was a little bit earlier. I don't remember when we marked it up. Anyway, though, I know we did call a buy on GJ last session that we did. And so we have been up 100 or 100 to 200 pips since we made that call. So that's looking good. From here, Orion did just mark this up. I think I mostly agree with his bias. I think that from here, I would probably be out of GJ with the exception of maybe doing like a small intraday trade on this on a lower time frame. Because we have all of this consolidation over here on the left that's proven in price history. I mean, I probably would be out of GJ right now. There's the potential to short this on intraday, I think, and make a little bit, but I would probably be setting up for another buy opportunity. I think this will probably pull back a little bit more from this level before continuing up to around here, 138, which I think is what Orion is also expecting, but correct me if I'm wrong.
Yeah, I'm looking at 138 too this week.
Yeah, so I think that looks pretty good. I'd be out of it right now. There's just not enough liquidity on Sunday, and I'm just kind of sketched about the markets right now with all of the fundamental news going on. So I'm trying to be careful with my trades. What was the other one? UCAD, I think someone called. I'll take a look at UCAD. UCAD's another one that's kind of tricky because of how closely it's tied to oil. So you got to be careful with UCAD.
Oh, one more tip.
Mm-hmm.
Trade first of all, understand the pair that you're trading, and second of all, trade at the same times every day. Don't just trade at random times. It's like it makes a big difference. Trade at the same times every day.
Yeah, so, I would agree with that 100%.
Yeah. So if your pair is something that moves during New York session, there's no point in trading that during the Sydney session.
Yeah, and you need to understand your sessions, guys. I mean, if you don't already look into it, I think we have information about that in the ebook that Orion made. I don't remember 100%, but yeah, but understand when your pair has the most volume, because you need to. I mean, just going back to the bare basics. I mean, you need to understand what Forex is, right? I mean, when you're trading odd USD, you need to understand the Sydney component in that equation. And, obviously you need to take into account when the Sydney exchange is open. And so this is just like bare fundamentals for Forex. Understand when your session has the most volume and then figure out when you're going to trade based on that information. UCAD, I'd probably be short. I think that we could see, this was crazy during COVID when it left these gaps on the weekly, no less, it looks like. So That's crazy. That might have been a broker thing because that's extreme. But I mean, you can see there's all kinds of UCAD loves to follow structure like this, really clean. You can see all the higher highs, higher lows happening right here. And then we had the break of structure here and then a retest. This is actually a really good example of that. So we had the break of structure right here, and then we had this retest of this trend, and then we had a downtrend form from there. And what's kind of more of a sideways movement, but there are some lows being made here. And from here, we had some lows being made, and then we broke back up. This is when COVID started locking everything down in March. I think this is March, early March. This is probably when we stopped traveling to Canada. Not 100% sure. Ever since then, it's been a pullback because this was an unnatural move. This was based on fundamentals, in my opinion. And you can see that there is that since that time on a higher time frame, price has re-entered this zone that we were consolidating in. And that's kind of what you expect to see when you have this like huge spike on news. And we saw this happen on a lot of pairs, but it looks like UCAD got hit a little bit harder on it. But we're currently pulling back. I think we'll probably see this come up a little bit higher. I would say probably see this hit the 1.35 range, and then I'd be shorting it probably from there. If you were going to short, you need to understand also that, let's get this out of here, and understand that there's a major level of support and resistance at this level. You can see it's been touched 1, 2, multiple times, and this is not even going back into the past, which it's been hit multiple times over here as well. Hit resistance, 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 and then it broke through and retested that broken trend and then spiked up, came back down, retested as support, finally broke through. It's currently testing it as resistance, technically, this zone. So that's the only reason why I would be a little bit careful with UCAD, because if it respects this level of support and resistance and continues on, then targets would be back down at the bottom of this zone, which is right around here. Right, and then if we go into if we drop down to like 4 hour to get like look at what the intraday is doing, you can see the potential for a long position, and that could push it back up into that zone that we were looking at on the weekly. You can see that we are throwing tons of wicks in this area. So this is clearly a level of support. So I think this could probably push back up into the area up here. If we pull a fib retracement, I think this pushing back up into like the 61.8 range, maybe a little bit deeper. We could see it pull back a little bit more to kind of close in on that higher time frame that we were looking for. And so I think this will probably pull up, hit a fib level, and then drop from there. That's kind of what I would be expecting on UCAD at the moment. And then from there, I'd be drawing a trend on the way down that way, targets back down around this area of support, and then onward from there if it ends up breaking this ascending trend that we have drawn. So short-term bullish on UCAD, higher time frame, I'm more bearish. And for my personal trading style, if I have that kind of confliction, if I'm expecting long on one time frame and short on another, I just don't get into that trade. I like there to be confluence between my time frames usually. Sometimes it's not always possible, but in this case, I would much rather wait for the short potential around here for UCAD and then have confluence between my weekly, daily, and 4 hour time frames and then short from there. And that's a higher probability trade. Cool. Glad that makes sense. Love it. What else we got? AU. Ooh, this is looking. I have all these old markups on here. We wicked into this level that I had drawn from last week. Cool, cool. Dang, that's looking good. So last week, Monday, 21st, I think it was, we were breaking out of this trend. We were calling for this pullback and then a retest of that broken area. So we had this trend, right? We had a really strong uptrend going on daily, and we were expecting for price action to, man, I had this drawn in a pretty way, and then I just deleted it all. We were expecting for price to come back up and retest this broken area of this broken trend. I think it's kind of doing that right now, so that's exciting. We have major level of support and resistance that we're testing right here. Yeah, I might like AU this week. I think this might go up a little bit higher still. Yeah, I think there's too much confluence for this to continue up a little bit higher, because if you check this trend on the way down here and the pattern that we had on the way up, there's a lot of confluence for this to push up and hit this area of resistance at the 61.8, which is in confluence with a lot of the wicks that we saw in past price action. If we go down to 4 hour, we're holding structure for the most part. Yeah, this looks pretty good. I think from here, I'd probably be expecting this to, I put the wrong thing. I think from here, I'd probably be expecting a push out of this area up to here. I might end up doing a smaller move and then pull back a little bit before continuing on. I think it's going to depend on what the US dollar does this week as well. But I'm definitely expecting something along these lines for this to continue up, hit the 61.8 at that major level on daily that I'm expecting. And then the perfect setup for me would be something that wicks into that 61.8 level, but I want to see the candles stay below this ascending trend. That's what I'd really like to see. And then a break of structure. You know, let's say that we have this kind of thing. If price action does come up and retest this area of this level of structure, I'd want to see a break of structure right here and then a retest from there. And then I would short. So there's a few possibilities here for AU. I think for intraday, I'm long on this. I think that this has potential, or this has strong probability of pushing up a little bit higher. There is a level of support, or there is a level of resistance to keep in mind right here. Right, so we tested this area of resistance already once. So what we really need to see for a strong bullish move on AU, we need to see it break above this previous high, which is a major level of resistance. We want to see it break above that, retest that level as support, and then push up a little bit higher, hit that 61.8, and then we're going to short it from there. That's what my plan would be for a swing trade, and then I'd be swinging that all the way down. What do you think about that, Orion?
Sorry, I was responding to a message. That looks good to me, actually. Yeah, I like that 61.8.
Yep. So on daily we have that break of the trend, right? So we're working on a retest of it. I think we have that descending trend line that's in confluence with the 61.8. I think there's a strong possibility this is going to make another leg up, break through this level of resistance on the lower time frame. I'm looking for it to probably wick into that 61.8 range and then short from there. Probably be my position.
Yes, and that lines up 72.5. Yeah, I like that.
Yeah, pretty clean.
Most definitely.
Yeah, so for as far as like, oh, so you're shorting that too. The reason I would be shorting this is because we broke structure on higher time frame. So I'm not going to be in a long position here because then there's no confluence there. So because I'm on a higher time frame and expecting this to drop more, I would be waiting. And a lot of trade, when it comes to trading, a lot of times, a lot of it is patience. You have to wait for your setup to happen. You don't want to just jump into anything and just roll the dice. You want to wait for your setup to happen. And in this case, because I'm expecting something like this to play out, I'm going to wait for that opportunity and then short so that I have confluence across timeframes. And if it doesn't happen, then that's cool. There's endless opportunities in the market for you to find the perfect setup. It's all about mitigating your risk and having the best risk reward possible. What other pairs you guys want to see? Or if anybody has questions about the stock market, let me know. Like, we keep this pretty open, and just let me know. I know that Apple call that I did, that I called is doing pretty well. US 30, EU. EU is probably my least favorite major. EU. Yeah, well, at least in this case, EU is looking pretty simple, right? So it doesn't get much easier than this for EU. We had consolidation in the form of really tight bullish market structure on the daily. You can see we are making higher highs, higher lows. So we can channel this, right? And a lot of my education that I do for NBB, one of the things that I love to trade is the median of channels. You can see this is a really great example of that. You pull the channel, you go wick to wick on each side, and you have that parallel channel. And very often you'll see that the median acts as a level of support and resistance. And that played out perfectly here with that wick that flew up, hit the median, would have been a great place to short for an intraday trade. And then we did break structure. And so now we are in a downtrend based on daily. So we're kind of shifting gears here. And I would be expecting this to retest more cleanly this break. And you can see we did have that break right. So I think that right around here, it did retest that level with that wick. I think that there's a strong possibility this is going to come up and hit this level one more time. We'll take a closer look on the market structure that we've got on lower time frames to get a better idea. But on a higher time frame, something like this is probably pretty likely. So I think that there's a strong possibility of this to come up and hit this level one more time. And then I'm going to be looking for a lower low on daily. If we zoom into lower time frames, we've got some confluence here as well. So you can see we had a high that was made here and then a low, not a lower low, but a low so far that's been made. And so from here, we can get a better idea of where we think price action is going to go. Actually, you know what? I don't even like that. Let me look at, well, I mean, for starters, again, we have this major level of support and resistance here that got wicked once. The probability of this coming up and wicking that level one more time is pretty high. especially considering that our last level of structure was a high. And then we have, so we're making lows, yes, but not lower lows. We are making higher highs. So that's a bullish sign. So based on that information, I would be expecting this to play out, for this to wick into that level. If we pull a fib from here to here, I bet that's a fib level too. Doesn't get any more perfect than that. All right, so pulled the fib, like I said, dead center 61.8. So I mean, yeah, I think there's a good chance this is going to come up. It's going to wick into the 61.8 again. From there, I'm short. First, take profit. You can have a really tight stop on a trade like this because of how much confluence there is. I'd have a really tight stop, probably somewhere you could get a better idea of your stop by pulling a trend line up that way, maybe put it right above the trend, give it some room to wick into that area. And then I'd be short from that 61.8 position, take a little bit of profit at this level of support and resistance down here on intraday. Take a little bit of profit right there just in case it plays around or bounces back up. But I would take a little bit of profit there, and then I'd hold the rest of the position for a low. I'd wait for it to come down, kind of substantiate that daily bearish market structure that we're expecting, and then I'd take some profit when you see it start to have signs of reversal on a higher time frame if you're swing trading. EU most traded pair, yeah, I mean it is. I personally just don't like it, but this is a pretty clean trade, so it doesn't get much cleaner than this. I think a short from that position is pretty good. I could take a look at Tesla real quick, change it up. Tesla. Yeah, I mean, so Tesla is kind of boring based on monthly. I still think this is going to come down and hit our level that Orion and I have talked about for weeks. We had this wick down, and I think a lot of people were calling this the pullback, so to speak. I don't think that's quite it yet. I think that we're clearly making a consolidation, or we're clearly making a breakout pattern here. So, you know, there is a trend line that we can see here. So we've got a pattern forming, breakout pattern. It could go up, could go down. It's a little too soon to tell which way this is going to go, but something like that. Let's find the best way that this fits. Something like that. I think we see this come down. If it breaks out, I could definitely see this dropping back down into this level. We had it a little bit lower based on the gaps that were left behind, but gaps happen all the time in the stock market on the daily. So, you know, trading gap theory on a daily time frame is not super effective because there's gaps every single day. But I think even on like a weekly, we left a gap back there. Yeah. So I think that's why we had it a little bit lower, because on weekly, we did leave a little gap right here. And so we're expecting this to break down into that level. I think their battery day announcement was kind of weak, personally. I think this is still one of the most artificially inflated stocks on Wall Street. So for that reason, I think it's being heavily manipulated. I'm not buying it right now. I'm not in it. I sold all my Tesla. If it drops back down into the 300 to 250 to 300 range, I think that's a time to buy Tesla. If you're long on it long term, which I think everyone should be. But for short term, I do think that the best buys are going to be 250 to 300. I think we're going to see those levels again, personally. Let me see how Apple is looking, because that's a trade that I called for the signal room. All right. We are up a decent amount on Apple. For a big cap stock, we're actually doing pretty well. We bought it based on the Ichimoku, and so we bought it out of here. I think our entry was 108. I didn't ever see it drop that low to 103, but yeah, 108 was our entry. We got up as high as 118, looks like. So it'll be interesting to see how this ends up playing out. For Apple, I think the name of the game is just to get the best technical entries that you can get and hold it. So
Yeah.
I'm
I
personally
think, not to cut you off, I think Apple can see like 95 one more time, potentially.
yeah.
Potentially, but
And if it drops lower, I'll just buy more. That's
yeah.
with stocks. If you believe in the company, just buy it down at smart technical places. I actually think I called for 102. I didn't know it went that low, or I would have bought more.
Hmm.
Um, I think that as it drops, a stock like Apple, you just buy more, and then over time you can use some of the gains from a company like Apple to fund other stock positions. Now, this could be making a um, lower high here, and then we could see a lower low dip into the 95 area. And if we see that, then buy more around 95. That's closing the gap here, which I think it's in the cards. Cool. What are we at for time? People are still joining.
We're an hour in.
Almost an hour. I'll do another one or not. Ben, how are they late? Yeah, they are. I'm gonna have to catch the recording. If anybody has any last minute chart requests, though, holla at me. I'll do GU and then we'll wrap it up. Oh, that's why. GU, pretty good. So I think GU. I don't think weekly tells us a whole lot because it's in an area of it's like right in the middle of a strong area of a strong zone that's been acted as support and resistance, consolidation, everything. And when I see a pair that's like right in the middle of something like this on a weekly time frame, I kind of take weekly out of it because weekly is not going to tell me anything in this case. The only thing you can kind of see on weekly is that, we are in an uptrend, but we're also hitting several counts of resistance on weekly. We have a major level of resistance right above it here. So I don't think weekly is telling us really anything too important. I would kind of take weekly out of the decision-making process for this one and go down to daily. From daily, we can see several different trends that have formed here. So let's start with those. And then we also have one right here where that'll kind of show us where this has been broken and retested as, let me just show you. You can kind of see here, we had a few touches and then it retested and since then has been kind of respecting it as resistance. So we can kind of capture price between those two lines. And from there, if we pull a fib, this is probably a 38 from the bottom. Let's see. if this is the level that we care about. Yeah. So as I said, that is exactly the 38 from the bottom where we touched here. On daily, we are technically in a downtrend, right? Because we broke structure, and then we retested. We made a lower high, lower low, lower high in the forming right now. So based on daily, I think this will probably come down and retest this area again. What we'd really want to see is, if you're bullish on this, what you'd really like to see is for this to come down and hit right around there and kind of create a support area on this previous level. And then from there, you want it to break structure through this area of resistance.
Hey Josh, put your crosshair at 125.5 really quick. 125.5.
Right
This
around
might
here.
be far-fetched, but what is this, daily? A possibility. We could see price create a third leg lower. A
Mm-hmm.
lot of times when it comes to like a swing move, if you look left, well, all right. So if you look, like at that big bull rally, right from 125.5, it rallied straight to the upside. Now price is back within that rally. I feel like it could create a third leg down and then reverse crazy and push back into 132 potentially.
Yeah, no, I could see that. And if you, like you said, if you're looking left, you can see that this has been both a level of support and resistance. Tested the resistance multiple times, tested the support multiple times. So there definitely is
But
and I think,
your setup could be like a like an intraday type of thing where it's like, okay, it pulls back up a little bit and then dumps into that level, trapping buyers, and
mm-hmm,
then rips back to the upside.
yep, that's definitely possible. And from there we can have a better idea of, um, we would see a higher time frame trend starting to form on the downside here and kind of substantiate the momentum that the Bears have. And so I think that definitely is in the cards. I think that when you're in a position like this where you're expecting a deeper pullback potentially, you want to pay close attention to the lower time frame reversals. And I would only take a position like this if I saw like a lot of consolidation along this level and a lot of signs of reversal. And I'd have probably a tight stop on something like this.
Or it would be
And
an inverted head and shoulder as well.
yeah, that's true. That would be an inverted head and shoulders. Um, and if that's the case, then we could draw a line from here and then have a target, which I'm sure would be a fib level. Just because I'm curious now, just because of how we know how this market works. Let's see if it would be or not. So when I'm doing my targets on a head and shoulders pattern, I take it from the neckline down to the top of the head. And that's how I usually get my target. And if we pull a fib from the top of this to the top of the head, maybe a good place to take some profit on a position like that would be around the 61.8. And then short, we could see some short from there back down into this lower level that Orion was talking about down
Yep,
here.
yep. That looks good.
So I think something like that
Yeah, so
is
so if daily finds support, what region is that? 128, where the right shoulder would form. One, yeah, Anders
126.
confluence there. It's like level 128. So yeah, if it finds support in there, long it to
Long it to
yeah,
around here.
61, and then short it back into that 125.5.
Yeah, and you could even take some profit off the table around these levels, around the 128, like maybe take a percentage off just to secure some gains, or move it, slide a stop loss up behind you and then ride it out into this area that Orion was talking about, the 128 or the 125 area down here.
Yeah, that looks juicy.
It do. Keep an eye on that.
Sure.
All right, guys, we're going to wrap it on that because we like to keep them around an hour so that people will watch the recordings.